The screech of tires, the jolt, and suddenly you are standing on the shoulder of a wet highway, looking at a crushed bumper. Once the adrenaline fades, you find out the driver who hit you doesn't have insurance, and you only carry a minimal state-mandated auto policy. Most drivers assume that carrying liability-only coverage leaves them entirely responsible for their own repairs in this scenario. But North Carolina regulations actually require insurance companies to provide a safety net, even on basic policies. An insurance policy operates like a conditional logic flowchart, a crash scenario matrix. The specific details of your collision determine which branch of the law takes over, triggering payouts for damage you might not expect to be covered. Surviving an accident financially depends on understanding which specific legal branch your crash falls into. To see how this matrix functions, we have to look past the crash site to the strict legal reality governing North Carolina auto policies. Every liability policy in the state includes a statutory requirement called uninsured motorist coverage. The law requires your own insurance company to temporarily step into the shoes of the at-fault driver to pay your claim. This protection has specific mathematical limits. At the state minimums, it pays up to $50,000 for your vehicle's damage, minus a $100 deductible. This mandated coverage is also designed to absorb your emergency medical bills. While the state requires this baseline to prevent immediate financial ruin, it is a rigid shield designed for average scenarios, not total protection. That $50,000 limit often clashes with the high cost of modern vehicles and smart car repairs. This chart shows the fracture point. The matrix covers you fully until the cost of your repairs reaches that $50,000 cap. Any repair bills beyond that marker fall entirely on you, creating significant out-of-pocket exposure. A modern, fully loaded pickup truck can easily blow past this $50,000 legal limit in a total loss accident. Relying strictly on these state minimums means the more your vehicle is worth, the more you are gambling on every drive. There is another variable that can bypass your coverage entirely: the instinct to swerve out of the way of an incoming car. This creates a miss and hit scenario. You avoid the uninsured driver, but you strike an environmental hazard, like a tree, instead. Because there was no physical contact with the uninsured vehicle, the state-mandated uninsured motorist coverage doesn't apply. The event is reclassified as a single-car at-fault accident. A liability-only policy pays nothing for your vehicle. Under a standard liability policy, a successful defensive maneuver can lead directly to financial loss. You can bridge these legal and physical gaps by adding collision coverage to your policy. Collision coverage pays for your vehicle's damage, regardless of its value, whether you swerved or if the other driver has insurance. It is better to identify these gaps now than to wait for a crash to reveal them. Knowing exactly where your coverage stops allows you to drive with actual security. Audit your policy with a local expert at Layne Insurance.